You know, you've heard them. There are some absolute horror stories out there caused by bad decisions and that lead to financial ruin. You buy the wrong investment property, you don't just lose money. You lose time, you lose momentum, and worst of all, you lose confidence. You get stuck with poor cash flow, low growth, chasing tradesmen, tenants, and trying to pay off tax bills. So let's avoid that by taking a couple of minutes to discuss one of the biggest early decisions you'll make as an investor, and that is, should I buy brand new or go for a second-hand property? So let's compare them so you don't learn the hard way. New properties now. Let's think of off-the-plan apartments, townhouses, house and land packages. They offer some big advantages. Low maintenance. You're not patching up old roofs and fixing ancient hot water systems. Everything's new, which means fewer costs and fewer headaches. Depreciation. Critical. This is where new properties really shine. You can claim deductions on both the building and the fittings, which means you could get back thousands of extra dollars in your tax return every year. Important, tenant appeal. Modern layouts, energy efficiency, fast NBN, better appliances. Renters tend to love this. This means shorter vacancy periods and often stronger rents. And in most states, you can also access stamp duty savings, and there are developer incentives that don't apply to older homes. But there's always a but. New builds can come with high developer markups, especially in high demand, high growth areas. And buying off the plan, well, you're relying on the builder to deliver. So choosing a quality developer is going to be key. Now, let's talk about second-hand properties. These are your established homes in well-loved suburbs, and yes, they can be great. Proven locations closer to schools, shops, transport, and in many cases, land values are stronger and capital growth is already underway. You can also add value, renovate, reconfigure, or develop. If you've got the skills and all the contacts, that sweat equity, well, it can be very, very powerful. But older homes often mean more repairs, less depreciation, and many people are not aware that the tax benefits on a structure you lose if it was built before 1987. So, in the end, which is better? Well, if you're a hands-on investor with time and renovation know-how, second-hand property might be the thing for you. But if you want reliable cash flow, tax advantages, strong tenant demand, and more time back in your week, then new property is often a better vehicle, especially for long-term investors building a portfolio. And you guess, this is where Property Black Book comes in. We help Australian investors cut out the middleman and deal directly with developers, accessing exclusive opportunities that aren't available on the major portals. You save time, you increase your margins, and developers get qualified buyers without having to pay huge commissions. It's a win-win. And it's how we think property investment should work. So if you're serious about growing your wealth and you want smarter deals, head to propertyblackbook.com.au and register your details. You'll gain early access to some great deals. Guys, thanks for watching.